Over the last couple of weeks, I've had many of you ask me, how on earth do you identify a potential momentous breakout stock, and how do you actually know it's sustainable? So in this video, I'm going to be going over my rules in which I follow when going over exactly this situation. And better yet, I'm not here to sell you a course. Everything in this video is free information, and it only gets better because all of the software in which I use in this video is also completely free and readily available. So let's get straight into what my actual strategy is and how I analyze these stocks. So off the bat, I know what you're thinking, wow, this looks like a vast Excel sheet, and it really is, but this is only a step in which I do to identify breakout stocks on a very light level. You can do this through a basic heat map essentially, but what are we looking at here? So I look at the 20-day price difference, the 1-day difference, the 50-day through to the 200-day simple moving average, a volume difference, an RSI, and the PE. But that is just the very tip of the iceberg. This is where you really can just get a good picture of where the stocks are heading. But you can do that by consistently looking at a S&P heat map, for example, which are available for free on TradingView and many other websites. So from here, what do I really do? This is rule number one for me to understand if a stock is breaking out. What do I do going into rule number two? Well, from here, I actually do my own analysis, which again is something which you can skip. So what exactly am I looking at on my financial and intrinsic analysis? Well, I'm looking at retention rates, liquidity ratios, and free cash flows to understand if the stock is in a healthy situation. Furthermore, I also have a normalized distribution or a bell curve to understand the probability of a positive or negative day. And I have a 365-day exponential chart to understand if volume is correlating nicely with the actual price. Furthermore, I have all of the key figures for these stocks, and this is basically the financial aspect of the analysis done, and from here we can do an intrinsic valuation. The stock you're looking at here, for an example, is Oscar Health, so we can see on Graham's formula, which is this formula in the top left and right, we can see that intrinsically this stock looks to be undervalued on the bullish side, but when we go to the bearish side, this stock is actually overvalued. I then take a look at Peter Lynch's valuation. Anything above a 1 is fairly valued, anything above a 2 is undervalued, and anything close to a 3 is very undervalued. Anything obviously less than 1 is indicated as overvalued, but this is an indicator in which I almost take with a pinch of salt a lot of the time because it isn't actually as accurate as we would like it to be. So looking here, this is where I have made my own formula, and the formula is down here if you can read my awful handwriting, but this accounts for way more than the traditional formulas actually account for. To list a few off, it goes off the average quarterly free cash flow, it goes over shares outstanding, the growth rate and the surprise rate of the stock over the next 12 months, the retention rate, which I conducted in the financial part of this analysis, as well as the liquidity ratio. Furthermore, it's also got the probability of a positive and negative day. So this really does have a lot in it for a formula, but it does give me quite accurate intrinsic value prices for a 12-month price target. So this here, the green number, is where I would actually aim to almost exit or adjust my stop losses once we're at that position of a stock. So currently for Oscar Health, I have this stock to be priced near $22 for this year's growth. I then move on to a free cash flow or a discounted free cash flow analysis to really understand whether or not this stock looks to be undervalued on their free cash flow. But this is very basic stuff, so we will leave this out as an important step. But it is important for long-term trajectories. So I know what you're probably thinking right now. What the hell is this man talking about? That is way too much maths for me. I just want to know if a stock is breaking out. And to be fair, these steps are relatively skippable. These are just something which I do to understand the intrinsic value myself. But if you can find the intrinsic value elsewhere, from Analysts, for example, then that is certainly a step forward. But I would recommend these steps. So now let's actually move on to the next step of my analysis. And that is step 3, which comes in 2 parts. So we've gone over my momentum system, we've gone over my analysis, so let's get straight onto the actual chart analysis, as I'm sure that's why a lot of you are here. So The two rules I look for using the EMAs on a chart. So we want to see the stock closing above the 150-day EMA. Why the 150-day EMA? Well, it indicates a lot of support within the stock currently, and that is where a lot of large money such as hedge funds like to place orders on stocks, as it shows there is a level of sustainability. So realistically, the EMA, of 150 days is really important, but there's another part of the EMAs in which I look for, and that is the golden crossover. If you aren't familiar of what the golden crossover is, it's where the 50-day EMA crosses over and above the 100-day EMA. And if you're thinking, where do I get these EMAs from? Well, if you open up TradingView, which is a completely free platform, and go to the indicators tab, you can just import these. Well, you can actually search these EMAs up yourself. The actual basic code comes with a 20, 50, 100 and 200 day EMA, but if you recode it yourself, you can realistically make your own strategy essentially. And to do that, the only things you have to do, it's not that complicated of a code. You just have to change the shortest to 50, the short to 100, the longer to 150, and the longest to 200, and rename the title respectively, of course. So that is all you have to do to get these EMA lines, and these are exactly what a lot of large hedge funds do actually look for. Furthermore, if you want another step to go above and beyond, you can open up the free Bollinger Band indicator here on TradingView. This is another indicator in which large hedge funds use to understand if a stock is overbought or underbought or oversold essentially. We can see here that currently Micron looks to be overbought, but it's more sustainable than it has been previously, which is what we really realistically wanted to see. We wanted to see a bit of selling pressure for sustainability reasons within the stock, and this could be a potential great place to be buying into Micron just off of the Bollinger Bands and EMAs, of course. But that realistically just goes over the chart, and that is really enough for me to just buy in. So I also look for step number 4, which is the price to be undervalued according to the analysts. And to do this, you can actually pull up another free indicator on TradingView called the price target indicator. And this essentially goes over the average price target in which analysts are pricing in the maximum and the minimum. And for me, this is a key part of investing, as this is what a lot of the retail investors will actually be looking at to understand if a stock is undervalued. And once the retail investors catch on, that is where the price really hikes. And this mixed in with my intrinsic value analysis, which you can do through Graham's formula, a simple formula, you can really see that this stock looks to be undervalued. And once the market catches on, it will just rally. And if you are not using TradingView and you want to see these price targets, then you can actually go to MSN, search up your stock, and here you can see what the analyst recommendations are. So the average for Micron currently is a buy. This is based off of 37 analysts, with 25 at a strong buy, 6 at a buy, 5 at a hold, and 1 at a sell. Furthermore, you can actually see the average price target on here as well, if I move my head. And finally, for the actual chart analysis here, I look for key levels of support and resistance. Now, you can do this yourself on TradingView if you just look here for levels of resistance in which you can identify by eye, in which is what I do. You can see here Micron hit this level of resistance and now has fallen back down below it, which is normally expected. You normally see it bounce up and bounce below and then rally straight back up. Typically, obviously not all the time, that is not financial advice, but that can often happen with these large scale momentum stocks. And realistically, before you buy into a stock, you want to see it close above the nearest level of resistance or support, because that indicates that the remaining momentum will actually be quite sustainable. Often big levels of resistance are all-time highs or previous 52-week highs, because that is where price is going to struggle to reach past. And if you aren't actually too sure on how to mark these out yourself, on TradingView there is another free indicator here called the support resistance dynamic V2, and this actually indicates where exactly you can price in a lot of these levels of resistance to be. As you can see here, I haven't paid for TradingView because there's no point. You can do all of this for free, and it's marked out exactly where I've marked these levels of resistance and support to be. So that's basically a firm that I've done it right. So the final rule in which I typically look for is a forward PE. So currently Micron has a forward PE of 22.48, which indicates that this stock is actually relatively cheap compared to its peers. And if we go down here on Yahoo Finance to the statistics tab, we can see that the forward PE for Micron is 10.89. Now that is obviously half of where we currently are pretty much. And if we go above this and look at the trailing PE, we are consistently around the 20 mark. So that basically indicates that this stock will always be around the, well, not always of course, but it should typically be around the 20 to 22 PE range, indicating that in the future, when this is at a 10 PE, the stock will most likely be bought. So for me, that is something in which I typically look for. It's something in which is actually really important to understand, because that is where, again, a lot of retail investors do actually focus on. Now, I don't expect you to go out and make your own momentum and Excel systems, so Yahoo Finance is where I get a lot of my data from, and especially for the intrinsic and financial analysis here. So we can see the cash flow statements on the right here, we can see the balance sheets, and we can see the net income statement. So they are very important tools. And furthermore, if we go to the analysis tab on Yahoo Finance and scroll down, we can see the next year's potential growth rate for Micron, and that all feeds in to my financial analysis. That is just essentially where I get all of the information from. And furthermore, to really almost future-proof this, I actually look at surprise rates from analysts as well and find the mean of this to also add on to the price, because analysts aren't, of course, always right. So they are my rules in which I actually look for when analyzing a stock. Of course, this is not financial advice and should not be taken as such. This is just my own system in which I'm displaying to you. For me, I think this is a very solid strategy. There is always room for improvement, and every individual stock will need its own different catering, essentially, as they are, of course, very different. And actually, one other thing in which you should look for is the actual market as a whole. For the American market, you want to be understanding if that is in a sustainable situation. You need to be looking at fear and greed indexes. You need to be looking at the volatility index, otherwise known as the VIX, and you need to be looking at, so for example with Micron, you'd be looking at a semiconductor ETF. You want to be understanding that the actual semiconductor market is in a bullish territory. If we do actually look here on TradingView again, because you can do it all on here, iShares Semiconductor ETF. So we can see here that this has actually, it's looking to be as if it's broken out according to the Bollinger Bands. And if we actually go to my EMA system here, we can see that it has opened into a bullish crossover, which you cannot see because I'm in the way. We can see that it is actually in a golden crossover. It was above, or in a relatively healthy situation within its Bollinger Bands, relatively overbought, but it is still showing a lot of signs of momentum. It is closing consistently, obviously now above the 150-day EMA, and if you want to be more cautious, then I would look at the 200-day EMA. But for me, that is exactly what you want to be looking at. You want to be looking at a broad market situation. You want to be looking at a focused ETF situation of the stock in which the market in which your stock is positioned in. And for me, when occurring with the other rules, this essentially shows me that this stock looks to be a sustainable breakout. Of course, there is other factors which will play into this, such as volume. You want to see volume correlating with the price to indicate that the price is supported. If volume isn't correlating with the price could potentially drop. Obviously, that is not the case all of the time, but it can certainly be an indicator that it isn't as sustainable as you may originally see on the face value. So I know that was a lot of information and a lot to take in at once, but I do go over this quite consistently in all of my analysis videos, and if you want to see me put this into action, then please do hit a like and subscribe, because I do this consistently now. I am on holiday as of the recording of this video, so there might be a bit of a scarcity in uploads over the next week or so, but I will be straight back on it, I promise. And with that being said, I hope you have enjoyed this video. Again, none of this was at all all financial advice. It's all just my own personal system in which I follow. You should always have your own rules and do your own due diligence when looking into buying into a stock. With that being said, I hope you have enjoyed, and I will see you for the next video.